Okay, everybody, good evening. Welcome to this evening's ACY Securities webinar for Forex Trading Live Market Analysis. Let's just get through the housekeeping. Please read through this disclaimer. Any questions, just put them into the chat box or the question and answer box. If you're on our YouTube live stream, I can't see the chat. However, you're more than welcome to watch or join us in the webinar. I've given you the link there to come in and join the webinar so you can chat and ask questions. So please read through the risk disclaimer before we move along. All right, let's move along. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time Forex trader. Been trading the Forex market now for more than 15 years. I had the opportunity of mentoring clients for more than 10. If you want to contact me about the webinar, simply send me an email to duncan.cooper@acy.com. And through the week, you can connect with me at our website, acy.com, the Market News tab, at our YouTube channel, ACY Securities Australia, or you can connect with me personally there on Twitter and LinkedIn. As well, through the week in our Telegram chat channel, you can connect with my analysis there as well. If you want to get access, just contact Nathan Bray. His email's on the screen now. I'll put these details in the chat in a moment. If you want to get access to my chart layouts and indicators, like you can see it here, and you'll see my charts very shortly, then just contact Nathan. He will help you and set those up. And as well, any questions about opening an account or changing your style of account, any questions regarding accounts, just contact Nathan. He'll more than help you out there. So I'll just put his details in the chat. Nathan, you asked me, how long did I play golf for? Well, I've been playing since I was about, I don't know, 10. For those that don't know, Nathan's kind of inferring, I used to be a professional golfer some years ago. I don't play professional anymore. All right, just put Nathan's details in the chat. If you want to get access to the Telegram channel, to my chart layout, simply contact him by phone or email. All right, let's get to, first of all, we'll have a quick look at the news. So let me just bring up the news. So we do have some very risk events coming out over the next day or two. I just want to refresh this. It's not telling me when the next event's coming out. All right, there we go. All right, so there's nothing much, but we do have one of the members of the FMC talking 2 o'clock in the morning. But more importantly, the bigger events coming out tomorrow. We have for the UK, the Bank of England governor speaking at 4:35 a.m. in the morning. Then 4 p.m. in the afternoon, we've got the GDP figures for the pounds. And more importantly, at 10:30 p.m. for the US, we've got the PPI data, core PPI data. And then on Thursday, we've got the CPI data and core CPI data. So the market will be looking to these items at the moment. Market at the moment is fairly flat and probably waiting for the information coming out tomorrow. Last month when this data got released, the market went into very heavy sell-off mode because the figures improved rather than lessening. So the market will be clearly looking to see whether these figures are still picking up, showing further inflation, or are the interest rates taking hold? All right. So ahead of that, get your levels set, because where price is now doesn't mean to say but that would be where price will be when the news comes out. So at the moment, the market has moved down quite nicely over the last, I would say, 2 to 3 days. Maybe getting ready for a rally. It's a little bit lackluster at the moment. So I'm just going to click through on my 15-minute charts and just see what price is doing right now before we get in. Right, number of pairs are coming back up to their central pivot points. All right. Just give me a moment. I might just start with the euro pairs. Euro dollar's kind of on some form of weekly support from back in time. But what I'm noticing on both of these pairs is euro dollar and euro yen. Just going to flip between the two. Is they've had a move down already and having some kind of rally, but they're kind of hanging around the central pivot point. So on the euro dollar, you can see here that overall the trend is down. We've had a nice movement down from 99.52 weekly resistance, and we're coming down now. These weekly levels here, 97.08 and 96.91, they're from a long time back in time. So I don't know how effective that level is going to be. The lower level is more effective, the monthly level at 95.99, because it's been proven to have a strong bounce from that level. So we're in a downtrend, and your opportunity should be looking to sell a rally now. These weekly levels, they are kind of just in the way, but we are holding at the central pivot point here. All right. So you can see it's held here once, twice, 3 times. So any further failure at the central pivot point may well be just an opportunity to get yourself short to trade down. Everything's seemingly getting pinned at the central pivot point. There's very little time happening above central pivot point. Now, there is that potential weekly support in the way. However, when you contrast the euro yen at the moment, it's put its high in for the day up here, and it has moved down at the moment. So intraday here at the moment, there's just a possibility here that we're heading up to this 79% retracement of the intraday range for an opportunity to move down. Okay, so intraday, there may be an opportunity to trade down from the 79% level back down to retest 141. All right, that's just intraday. When you look at the day chart, and we've had about 3 or 4 days down, 3 days down, 4 negative days, there is a possibility that we could get a slightly higher rally if you're looking at the higher time frame. So higher time frame area to watch would be 142.31 from this top over here, old support being resistance. So if I was looking, I'd be more inclined to see if we can get a day up to that level. However, being patient for that level to see whether that level of resistance would fail for a move down may well mean you're just being patient and waiting for price to rally, but it may not rally because this pair has just been wanting to rally intraday and then move back down. So I'm just going to do a little bit more work on yesterday's range here. All right, you can see where it's failed today already. Just using that high, and that's a fractionally higher high, but drawing my fib across that way. I just put that back there, drawing my fib across. And moving that over that way isn't really a true way to draw the fib. You almost get the 79% level exactly at the same spot. So that is the range of yesterday. And if the market doesn't want to have a day up to that day chart resistance, we could well just see this area where we've already failed retested. All right, at the moment, it's very much moving down. It's rallying intraday and then moving down, keeps rallying and moving down. So look for areas where the market's been failing for an opportunity to maybe sell a rally. So we've got a pivot point here, 79% of yesterday's range. You can watch for that area to fail. Does it give you a trend line break to trade to the downside? If we do move much further up, if we can move above 142, for example, then look at, just back to my day chart, look at, or I'll have to take my fib off so we can go to the day chart. Look at broken support becoming resistance up here. Okay, 142.31. That would be my preferred option, but I'm not sure whether price can get up there because the intraday rallies keep getting met by the sellers. Okay, so you can be patient and try to look for 142.31. That may not come today. It might come tomorrow when the news gets released. However, it may not come today. All right, I'm going to cycle over here and have a quick squeeze out the dollar index. So long term at the moment on the dollar index, we are seeing that we've moved above the 79% level of the larger range. And it may well have the 121 level in its sights. The 2-year and 10-year yields are rising and the dollar index is just following suit. So we may well be heading towards that. At the length of the monthly candles at the moment, potentially we could get there late this month or into next month. All right, if we have another long candle like we had last month, we won't be that far away from 121 by the end of the month. Okay, so certainly more than possible to get there in November, December. So keep your eye on that. So at the moment, US dollar strength, so pairs to the US dollar are going to be looking to be moving down. S&P 500, it is putting in fresh low last week. Did have a strong reversal, but the strong US job figures has pretty much negated that, and we may well move to a new low this week. So we're seeing US dollar strength, stock market weakness. All right, let's get into the Aussie Yen pairs. Now, the big thing I'm noticing on the Aussie Yen, I know there's lots of lines here, but last month's candle was a massive rejection from monthly resistance here and over here to the left-hand side. All right, so as well, from this high of the major range to the low, there's a 79% level here at 95.67 that we're failing at too. So we may well in this area be starting to change the long-term trend for a long-term move down. So from a positional point of view, maybe getting set with a position for the long-term move could be the way to go, especially if we are putting in a top there at the 79% retracement. All right, in terms of the monthly trend, it won't turn to down until we break this low here. But of course, last month was very negative. We could still obviously not break that low and by the end of the month have a positive candle. But at the moment, last month's negative, this month's negative, heading towards 90.51 monthly support. If we break that level, then that does start to put this pair into much more of a stronger downtrend mode in terms of, is it putting in a final top here? So keep your eye on that. So the weekly trend, we had half a week up last week and we're down this week already. So we're putting in a lower top. All right. So we've got divergence. So it's kind of signaling a major top up here. And the daily, it's just bouncing, trying to break below this area of support over here at the moment, 91.41. It is fractioning below that level. And then we've got 2 monthly levels of support from back in time and this monthly low here at 90.51. So the critical level to watch, I should put a line in there, 90.51, is if we break that level, this is clearly in a downtrend. All right, the 4-hour chart. Structure-wise, it's all downtrend here. I'd be looking to try to see where can the 4-hour chart have a rally. It is below 91.41 today. That's a weekly level of broken support. Whether or not it can stay below that today, you may want to come back up to daily broken support up here at 92.12. So I would prefer to be selling down from a higher level. So 92.12 would be ideal, but price might not give me that. Price doesn't always give me what I'm wanting, but it hasn't had much of a rally over 2 or 3 days. So, you know, getting a 150 pip rally, or let me just recalculate my maths. It's only 60 pips, sorry. Getting at least a 60 pip rally would at least give us a healthy rally back up to the last broken level. All right, so watch 92.12. Look to sell a rally in a downtrend to your 50-minute chart. So 92.12 is up here. It's just actually beyond the central pivot point today. There is every chance that we can get up there at the moment. This isn't quite looking like it wants to spend too much time below 91.41. You can see these high bottoms forming on the 15-minute chart, higher tops and bottoms. It's just starting to look like it's going to start to climb above 91.41. So this could be well heading back up to the area of resistance that I would prefer to be a seller at up here. So from 92.12 down to 9200, and a pip or two below that, you've got the central pivot point. So that would be a good area to watch for price failure for another move down. All right. This for me down here is a little bit too low down to look for a sell, but up at that level would be great. Cameron, you asked me, how do I get my charts to stay still when swapping timeframes? I just click the button. I don't know. I just click the button and it just stays still. Have you got these buttons selected up here? So these two buttons here, the green and the red kind of arrows with the axis drawings up here, make sure those two buttons are selected and you should be good to go. All right, maybe you don't have those selected, I don't know. All right, Slav saying Bank of Japan goes ahead with another intervention, which is sort of hinted today. It can break through those levels pretty quickly. Yeah, if we get another intervention, those at monthly level I was just discussing can certainly get broken. Last time we had an intervention, these yen pairs went down like 400 to 500 pips. So, you know, looking for an opportunity to sell. This is definitely in sell mode at the moment on the Aussie yen. So an intervention is only going to push it down. So, you know, with the whole thing in the back of the mind about intervention, I'm not looking to buy any of these yen pairs, looking to structure an opportunity to trade down. So watching up there, you know, around about 9,200, that area there for an opportunity to sell. Aussie dollar. All right, got a couple of levels drawn in here. You have to go back in time, but 62.47 is this monthly level of support. Just above, there's a weekly level of support. So we're just trading in this area at the moment. The next level below, if we can break below, is at 60.05. So the 60 level, this pair could be eyeing up at the moment from back in time. All right, so on the day chart, the levels I'm watching, at the moment we have close to traded down to 62.47. We've been like 2 fractional pips short of 62.47 today. So I'm just watching to see if we can move back up to 63.63. That's last month's low. Can we get a bit of a rally? When the news comes out tomorrow from the US, we might get a rally, depending on what the news is. Now, even if the news from the US tomorrow is fractionally negative, the overall trend's still down. So an opportunity to sell a rally would be ideal. This is just in a downtrend. I'm not looking to do anything to the upside, just looking for an opportunity to sell. And I did some analysis on this earlier in the day. Has moved further down. I did have a fib drawn from that high to that low, I think it was, but now I'm just going to readjust. 62% overlaps perfectly with daily support here, 63.63. So that would be the area that I'll be watching over the next couple of days. Can price come back up to that level for an opportunity to trade down with the trend? You know, if we're moving down to 60, getting short at 63.62 or around about 63.50, that's 350 pips. Wouldn't sneeze at that. All right, so at the moment, whilst I'd love this area up here to be bet up here, maybe we can only get up to the central pivot point. Yesterday, we only managed to get to the central pivot point before trading down in a strong trend, be it to the downside or to the upside, but in this case, downside. Then the central pivot point is often just the high of the day. It was the high of the day yesterday. Any upward pressure here may only get to the central pivot point. So you can watch that intraday today, but over the next 2 days, I'm watching that area up there at 63.63. All right, cover the euro yen. My area over the next 2 days is just to watch 142.31. Broken support to be resistance for a move down. You can see though, I highlighted the area up there. Price is getting capped, and I had my fib drawn from there. Price is getting capped close to that 79% level of yesterday's trading range. All right. Maybe this can't have much more of a rally than what it's having at the moment. Euro dollar, it's just holding at the central pivot point. There are no buys too much above the central pivot point. So these weekly levels, 97.08 and 96.91, they are from way back in time. We may well just be eroding through those areas today to move down. At the moment, it's definitely capped at the central pivot point. So, trading at the central pivot point, stop at the next pivot. It's only 16 to 17 pips away. Small risk in pips for the opportunity of this to break down below 97, heading down towards 96. And my target at the moment, I'm actually short this pair. My target at the moment in the short term is a retest of 95.99 monthly support. So that's almost the 96 level. So getting short, maybe at central pivot, risking no more than 20 pips. Central pivot today is at 97.15. So there's 115 pips to go to monthly support. So that would be good, great risk reward if the central pivot point holds today and we just continue and move down. All right, pound yen. It's not the easiest pair to trade at the moment. This fib is drawn across last month's high to last month's low. We've rallied back up and potentially putting in a lower top area here above the 79% level, moving back below. It's just sitting on day support, so it's not in the most perfect area to be a seller in line with that trend. It would be great if it could just come back up to 162.73, broken support. Can it come up to that level over the next 24 hours to hold for an opportunity? Getting set on to sell a rally on this pair could see this over the course of the month move all the way back down from where it came from. Or at least this is a weekly level of support that it could break through to come down to the lower level. That level could break to trade down to the even lower level. All right, so there's 3 weekly levels of support there that could potentially break in line with the trend. So getting a short high up within that range for a further move down in line with the trend would be the theme. All right, pound dollar. Today a chart. Now had a complete failure, not exactly at 114.09, but 114.09 is this broken monthly level of support. That was. We came down to the all-time low area, 104.63, had the bounce, but the monthly trend remains down and your weekly trend remains down. We've actually put in a lower top. We're having a week down already this week. Big run up last week, weekly rejection, starting to form a further lower top. All right. So we are failing at 79% level of last month's range. Could we be back down to the low of last month this month? I can't sell it at 114.09 anymore because we're not there, but there is a potential that we could pop back up to 113.50, which is daily broken support, before moving further down. At the moment, the market's just asking itself, can it trade down below 110? So if it can't in the very short term, we might see some rally back up, giving you an opportunity to maybe get set for further move down this month. So it's going to be a bit flat and sideways here. We do have the GDP figures coming out tomorrow for the pound. So I'm sure the market is getting set for that. All right, so watch 113.50. Do we get a nice news rally? I mean, we could get up to 114.09 at a pinch. If we look at the current range from last week's high to where we're at, then the 79% level of that most immediate move down is at 113.88. So, you know, there is the potential for us to revisit the 11400, 114.09 level, potentially. Do we still hold there? So anywhere from 113.50 up to 114.09 there, that area. We got the bank, so we've got the GDP figures coming out tomorrow. We have the US PPI data coming out tomorrow, and then the CPI the day after. So that area can definitely get hit this week. Does it offer an opportunity to trade down? All right. If we get a clear, at the moment, if we move to my 15-minute chart, we are kind of getting support here, 110. You can see though intraday today, look what's happening at central pivot. We're holding there. We were a little bit above it early in the day, but we're failing there now. We could be failing at the central pivot point now for a move below 110. All right. As well on that intraday movement that we're seeing. For the range intraday today, we are at the 79% level, failing here. Are we failing at the 79% in line with the central pivot point to move down to break the low of the day, to move below 110? But you can decide whether you want to trade in that area now to trade down. But if we get a clear break of 110 today, tomorrow look for 110 to be resistance for a further move down. So 110 is a line in the sand for the buyers at the moment. If that breaks today, watch 110 for resistance tomorrow. Okay. All right, I got a few things coming in my chat. Slightly saying markets probably waiting for Friday when the Bank of England should stop buying bonds program. Well, maybe, or it's just waiting for the US news coming out. But if you look intraday at the moment on the pound, you can see, you know, we're going down, rally, down, rally, down, rally, down, rally. We're not able to take out any of these rally tops that we're creating. You know, 111 at the moment looks like the cap. Central pivot point at the moment in London session looks like the cap for a move below 110. So yeah, you're saying next week we could run down. Well, next week, yeah, could run down this week too. So just got to get your levels in. Last week was the major opportunity to trade down from the 114.09 level. It might offer it again later in the week, or maybe we've missed the boat there. Now we're going to have to look at some new levels. You know, if 110 gets clearly broken today, that's a very clear number in the market, then 110 could be resistance tomorrow. All right, New Zealand yen. Just to the monthly chart, this looks very similar to the Aussie yen in that of the major range, we're failing at the 79% level here. Okay, lots of weekly candle highs holding there. Well, so these are monthly candle highs and a massive rejection last month. Slightly positive for the month at the moment. We traced back inside last month and almost breaking the low of last month, this month. So are we very much like the Aussie yen putting in a long-term top here? Monthly MACD by the end of this month may be crossing down. When you get across down to the monthly MACD, that is often a significant shout out to say, okay, we're putting in a significant monthly top. So that's not quite crossing down yet, but we've had 1, 2, 3, 4, 5, 6, 7 months of price action here that wasn't able to clearly negotiate this level. And then last month kind of declared itself to the downside. So on the weekly, we had half a week up, finished positive for the week, but almost down. And we have traded below last week's low. So we're putting in a lower top here. MACD divergence. So it's, look at all these weekly tops up here, holding, resistance. That was really the area to try to get a sell, because now if you did, you're home and free now. You're really, in terms of risk, you're just waiting to see if this can move down. All right, at the moment where price is, it's not the nicest place. It's kind of in an area of support here on the day chart. And this is quite a significant low here at 82.12. So this day chart trend is now down because we've broken that low. So if we can rally back up to 82.12, or even it could get up to 83.01 again. Say last week, 3 days, it traded above but couldn't hold above. So drawing a fib from that high to the current low. Let's just have a look where these levels all line up. 62 is at 82.74. 79 is 83.29. I don't think we'll get above 83 this week, because we were failing above there last week. So in between the 62 and the 79 is that 83 level. So I would be looking in this zone for a potential rally. Can it rally back up there? Now, if it does, it will potentially form left shoulder, head, right shoulder. Okay. Now, whether or not that comes together through the week, or it may even take till next week, depending on what price does. But there's a potential. We know that the price action on the weekly chart is breaking down to a downtrend, but there's a potential to have a rally back up to put a right shoulder in there. All right, so get that level set. The left shoulder is at 83. The 62 level is at 82.74. And if I was going to trade this myself, I'd just be trying to trade 83. But if it can't get to 83, between 82.74 and 83, watch that area for potential failure if we rally back up there. All right, I'm not interested in selling it right now into all this day support, but rallying back to resistance would be ideal. All right, so monitor that. We can pick that up again on Thursday. New Zealand dollar. Go to your monthly chart. We're not that far away from this monthly low at 54.68. The next one below it is at 48.92. It's a clear downtrend. There's always a possibility that we bottom at monthly support. However, we'll just have to wait and see what structure starts to form there. At the moment, there's not that much room from 55.64, which is a daily level of support, down to 54.68. There's, what is it? Well, there's a bit of room there, isn't there? There's 96 pips. So clear trend on the monthly. We had like half a week up, finishing down for the week. We've broken the lower that week, so that's another lower top forming. We're just on day support at the moment, so it's not the perfect level to trade at, because clearly I don't want to sell into support. Like the New Zealand yen, this little area here could be a left shoulder, that could be a head. We could see a rally back up. So I'll just move to my 4 hour. We could see a rally back up from this level at the moment. So some buyers could come in at this level in the short term for a movement back up to opposite the left shoulder, just there. So the 79% level lines up with this area of left shoulder resistance. Can price come back up to that level through the week and offer the opportunity to trade down? Now, you know, if the US news comes out slightly negative, maybe there's a slight downtick on the data, we may see a relief rally. So get your levels set. It may only just be a relief rally, not a trend changing rally. So get these right shoulders drawn on your chart where they could come in. All right, so that's 57.53 is a 79% level, and that's 57.50 is the left shoulder. Just be aware, you know, price could stop at the 54.68 monthly level. All right, be very much aware of that level, that the market needs to negotiate that level if we're still moving down. So don't get caught short not managing your trade if we get down to that level. All right, dollar Canadian. Now on the monthly chart, I've been discussing the possibility of a long-term head and shoulders. I don't think it's going to come to fruition because yes, we had an initial sell-off, but we're putting in a higher bottom on the weekly chart. So I think we're just going to move through here. We could, you know, get some news that changes the overall structure of the market. But at the moment, I think this is moving up. We're putting in a higher bottom on the weekly and we've moved to a higher top. So we could still potentially over the next month form that head and shoulders if the fundamental news changes for the US dollar. But if it doesn't, I think we're just simply moving higher. All right. At the moment, it's not in the perfect spot to be a buyer because you're buying the top of the market. All right. So, you know, from a perspective of how can you trade this pair now, if we are moving up and through and that right shoulder is not forming, the 137.92 monthly, that high there, 137.92 could become support on a pullback. So we're only getting one day above. Today is the day above it and above this high here. So on the 4-hour chart, what we would like to see is that we don't now move below 137.92. So pretty much 138. If this is going to continue up now, 138 in general terms should be support for a movement back up. So if we went up to 139, certainly look at 138 to be support for the market on a pullback. And that could be a good opportunity to trade up. We could well be moving up now. To the 79% fib to test now at 140.97. So that's almost a 141 level. So trying to get a position at 138 on a pullback would give you a 300 pip room to potentially take some profit. All right, on the 15-minute chart, it's quite strong at the moment. We're getting nowhere near the central pivot point today. So any dip down today may well only come back down to 138 to 137.92. All right, through the week, watch that area for support. So we had a very impulsive move up through here, which continued for quite a while. And any pullbacks at the moment isn't getting anywhere near there. So it may just pull back to that level through the week, offer you an opportunity to trade up. All right, dollar yen. Monthly chart. It's in a clear uptrend. The higher level line is this major top at 147.68. We're what about approximately 200 pips away from that, just under. I mean, the market could get there, but the Bank of Japan is definitely circling for some interventions. So, you know, if we do get up there, then the Bank of Japan could certainly intervene up there. All right. It intervened the last time around about the 145 level. But monthly trend is up, weekly trend is up. The yields, are just continually moving up at the moment. So Bank of Japan coming in and intervening might be, false policy, because can they really stop this moving up while the yields are moving up? So weekly is clearly up and the day is up. That was the intervention candle here. So the high of that candle was at 145.89 when we've been about 2 or 3 pips away from that high today. At the moment, I'm not going to be buying at the high of the move, and I'm concerned, like some of you, that intervention might come in. So probably $1 yen at the moment isn't the best pair to trade, just because of its position where it is right at the moment. It's at the high of the move, plus the question mark about the Bank of Japan intervening. So but you can monitor it in terms of its position. If this, starts to sell off significantly, that is certainly going to help the sell-off that we're seeing on the New Zealand yen, the Euro yen, the pound yen, and the Aussie yen. All right, so that would certainly exacerbate the movements we've been having on those pairs. So just keep monitoring the position. Structure in the 4-hour, it's just in an uptrend here. You could certainly look for structural change up here for a movement back down, because it starts to show a lower bottom, lower top. I'm sure not just the Bank of Japan, but the rest of the trading community is watching these high. Can it be breached? Is it going to be rejected? Are we going to see a change of structure in this area for a movement down? So the 4-hour chart's not showing that at the moment, but over the next week, it could certainly change its structure. So just keep monitoring it. All right, let's have a look at gold. All right, so the monthly chart. The level of question is the 1676 monthly support level, or is it now resistance? We've had some buying pressure to move back above. However, we are below. And, some of my colleagues at work, we know this is a double top. And, economists alike all saying that this is potentially going, above 2,000 to 2,500. We're creating this double top, and we're below the midpoint of the double top. If this is true double top, we potentially, kind of got divergence there as well when we didn't quite make a higher high there on the monthly chart, but when we came up to kind of do an equal high or a fractional lower high, this indicator was way lower than matching highs. So it's not perfect divergence, but it by no means had the momentum to put in anywhere close to a higher top on the indicator. So we could be seeing, a considerable decline. If that's a true double top, the height of the pattern projected below is at 1278. Now, I don't know if it can go to 1278. That may be below, the price that it costs to dig it out of the ground. But Nathan, you just asked me, have I heard any talk about JP intervention? I think I saw a headline or two on the Forex Factory, but since we've had the first intervention, quite clearly, the Bank of Japan will still be, getting ready if it really starts to move above 145. All right, so gold, can we get a major decline down to the 112.78 level? What we're seeing this month is we've traded back inside last month's candle, but we couldn't take out the high. Slav, I know you got short up there at 79% retracement of that candle. I don't know whether you're still in it, but looks like we're just putting in a lower top here on the weekly. We got some buying pressure from underneath support. So go above for a while, but we're almost breaking last week's low to put in a lower top. All right, Slav's telling me he's closed the trade, but hopefully you made a nice profit. So today's moved quite clearly below. Today's high hasn't been able to trade at 1676. All right, I would say any movement back to retest 1676 is a trade at resistance to move down. All right. And this is the range of last month. That's last month's high up there. Anybody's been to my webinar on the candle ranges of the weekly and the monthly chart. That's the candle range for the monthly. And we got above the 79. Couldn't take out the high of last month. There was lots of 4-hour resistance over here too. That formed before we formed last month's high. And ultimately, we started to fail at the 79% level to move down. All right. And with that range from last month, failing at 79% area here, we could well be moving down this month. You know, if we put in a similar range to last month, we're coming down. Let me just measure last month's range. All right. Let's call that, that's last month's candle. Then that would get us approximately, or get us below there just. And if we're a little bit more aggressive on the candle this month, we could be moving down to the 127 extension. So at the moment, you can see there on the 4-hour chart that we've put in an intraday lower top, not wanting to get back up to 1676. So it might give you that opportunity when we get some news to come out that we can have a spike up there. So we might get a rally back up to 1676, but today price action is telling you it does not want to get back to 1676. All right. And central pivot point today is just fractionally above 1676. So we don't have any news coming out today. So unless some news comes in from somewhere else, there's nothing much to drive it up there. All right. But clearly the area to watch today would be up here for an opportunity to sell. Central pivot point, 1676. Can price action get there for a further movement down? This is the second time now, back to the day chart. This is the second time now that we are wanting to be below that level. First one was below a couple of weeks, and then we false broke and moved back above. But now that we're wanting to be back below that again, the buyers weren't prepared to hold it above support as it came back down. So that to me just looks weak. Maybe we are going to have a major move down to 1278 if that double top pattern can run to fruition. All right. All right, Nathan, you want me to have a look at WTI? Okay. All right, just to finish off, I'll have a look at oil. All right, the monthly chart is a little bit mixed in that we've got a higher bottom and a lower top. That lower top, though, is really forming at this failure at 114.44. So you see those 3 monthly candles, but these two here, that was the spike up when the war started, but then the retest, 2 months retested and said, okay, this major area of resistance over here is going to hold. So really we got we could say a major It's going to squash this in a moment. All right, there's no more data to the left. So, this is a major double top here, like we're seeing on gold, but gold's much more significantly declined and broken its midpoint. I don't know if we can break the midpoint of this double top because the midpoint was actually below zero. Oil went below zero at one point, didn't it? So we do have a higher bottom here, but we have a lower top there. So it's a little bit mixed. We could maybe say that, let's forget that lower top there. From there to there could be the range of a pullback. We're fractionally above 62. We're fractionally above that level there at 85,928. So as the monthly could be holding its trend, the weekly is clearly down. All right. And this rally here at the moment kind of looks like a rally back to resistance over here. So let's just get rid of that fib. Let's use a lower level, 92.293. All right, so we're right at that level. So pretty much, approximately 92 could be where the weekly chart is putting in a further lower top. I know things are getting more aggressive in the Ukraine with the war, but structure-wise is holding. We're at resistance, selling off over the last 2 days. Is this just a relief rally to the 79% level? Weekly resistance, forming a lower top on the weekly chart. That's what it looks like to me. All right. So we could well be moving down over the course of the next few weeks towards a 127 extension, down at 70 level. I don't know what the economists are forecasting, but if that just continues its weekly downtrend, putting in a lower top, looks like it's heading towards the 70 mark, approximately, maybe. We will see. All right, any more questions? While you're waiting for a question, I just want to go back to Euro Yen and see what that's doing. Just want to do a bit more analysis on this pair. This is one of my favorite pairs at the moment. I'm wanting to have a much higher rally than what it's wanting to offer today. We go back to, I want to go to the weekly chart. See how we've been holding up here. See how we put a very negative weekly rejection in up here at 144. I'm anticipating that I'm trying to get set for a movement down with that lower top forming. Maybe down to the 135 level. If we can get some steam moving down there. But what I'd like to do is sell it at a level of resistance. So at the moment, I'm just monitoring 142.31. Can that offer me that? My fib was drawn from there to there. Now, can we get a rally back up to 142.31? Kind of lines up with the 62 level for a movement down. Leave for me, want me to do the CAD yen? Gaurav, you want me to look at the dollar index? I've already covered that, but I can go back to the dollar index. And Harash, you want me to summarize what will be my favorite pairs to trade this week? While Euro Yen is on my radar, that's my one that I'm really watching. And I'm also potentially watching the pound. If the pound can get back up to this area up here between 135 and 113.50 and 114.09, looking to sell a rally for a lower top to form on the daily there. Those are two ones that I'm really watching. Some of the other pairs are much more overextended, but I have highlighted on the New Zealand yen the potential for a left shoulder formed here, head. So the potential for a right shoulder to form on the New Zealand yen, maybe at the 83 level, if we can rally back up. And the similar thing on the New Zealand dollar. Potential right shoulder could form at the 57.50 area. All right, so there's four pairs there that I'm watching. Can we get a rally for an opportunity to sell? Gaurav, you want me to look at the dollar index? Really, it's just in a clear monthly uptrend heading towards this significant high over here at 121.02. All right. It's just in an uptrend. It's going straight up on the monthly. On the weekly, it's putting in a higher bottom, further higher bottom to potentially move up to a further higher top. Okay. It's just in an uptrend. All right. Well, if May, you want me to look at the CAD yen? Well, I had that open. Here we go. So over here, my other set of charts. All right. Well, nothing much has changed too much from last week's review. We're still, for the month, holding at this monthly level of resistance, 106.50. The weekly, last week held. This week, we haven't been able to get up to that level. The daily is putting in a little lower top just there. We had a bit of a rally up yesterday. Today, we've had a day down, putting in a lower top to the high that we formed yesterday. So if we trade below 105.04, that's going to start to confirm that we're going to maybe head down to test this level of support at 104.56. So it's back to the weekly. You know, if we break these 3 weeks lows here, we'll need to break. So that level of the low is 104.56. If we break below there, that's going to start to confirm a lower top on the weekly to, of course, potentially start to confirm this change of trend at major monthly resistance. All right. So to the daily, key level to watch, wherever the lowest point is. So it's 551, 104.551. Here's your 4 hour. On the 4 hour, it's a bit range bound, but you really, you know, first is maybe start to see a significant trend to move down nicely. We need, you know, if you haven't already had the opportunity to trade down from the 106.50 level and get a nice entry up there, then to see whether we're going to start to see a nice trend moving down, if we see a clear break of 104.55, then hopefully it will rally back up to 104.55 to be resistance for a move down. All right, so that's going to be the line in the sand in terms of is this pair breaking down to the downside? 104.55, can that break? All right, Olive May, hopefully that helps. Intraday at the moment, what are we seeing? Today didn't want to get to the central pivot point, so it's very strong to the downside in terms of intraday price action. All right, it's in the green zone, so it might have a bit of a rally back up. I mean, it could rally back up to central pivot points. That would be a nice area to look to structure an opportunity to trade down. That current move at the moment. $79 level, 105.96. If we do get a rally, 105.96 up to the 10600 level, the figure, that will be a nice level to look for an opportunity to sell as well. But whether or not it's going to offer a rally, I don't know. All right, so that's your analysis on the CAD yen. Any other questions? While we're thinking about a question, just to give you a heads up about what's coming up this week on the webinars. Tomorrow, I'm going to be going through market liquidity. I'm doing 3 webinars in a row, giving you an introduction to what they call smart money concepts. I'm not going to be, how can I say it politely? I'm going to look at these smart money concepts, market liquidity, order blocks, price imbalances from the perspective of, I don't just look at those concepts just on their own, just from a pure smart money concept. I'm not fanatical. If you go on the internet, have a look on YouTube, they get a little bit fanatical about smart money concepts, and that's the only way that you should be trading. And they think that it's, the way you should trade, and all the other ways that you can trade are just retail ways of trading that don't work. I think that's just rot. But what you need to understand is that there are different ways to trade. And the more that you know how the market operates and how other traders are trading, the more information you've got should help you with how you want to trade. What style of trading do you want to trade as you're moving forward? So I do use market liquidity in my analysis. Next week's webinar on Wednesday. So this week's webinar on Wednesday. So tomorrow's market liquidity. Next week, we're going to be going through order blocks. I don't use order blocks fanatically, but I'm aware of where they are. And I also use them in combination with support and resistance. So I don't fanatically use them, but I'm very much aware of where they are sitting on the chart. And if I see price starting to fail at an order block, I'm adding that into my analysis. So do I just trade order blocks singly on their own? No, I don't. But it's something that I'm aware of, and it's in the back of my mind when I'm looking at the charts. It's just another form of support and resistance, but formulated in another methodology. And after that, we've got price imbalances. I definitely use price imbalances within my trading, okay? Do I combine all three together? Not necessarily, where somebody else might, but having an understanding of the three concepts, you can most certainly combine all three together. And I may well combine all three together when I'm going through the webinars, but it's an introduction so that, way other people trade. If you're not aware of how other people are trading at certain levels, maybe that's risk to you because you're not really understanding what price is doing there and why is it operating in a certain way at a certain level. So certainly having an understanding of how liquidity is operated in the market, that's definitely going to help you. You don't necessarily have to trade liquidity as a concept, as long as you understand the concept and maybe just then tweak how you're trading at the moment. All right. Because trading liquidity, if you're going to enter, you potentially are going counter trend. So maybe you don't want to do that, but you might be wanting to be aware of the concept so that maybe you don't trade in the opposite direction at that point in time. So that's what's coming up over the next, 3 Wednesdays in a row. So if you've got an interest, you want to learn about market liquidity, then that is coming up tomorrow, 8 p.m. New South Wales time, Sydney time. Just go and register your interest. Any final questions? Cameron, you're asking me about pound dollar. You're saying rally to 113.50 to 114.09, correct? Yeah, I'm looking in that area. Can price rally to that level? I think if today we break 110, probably that area now is getting a little bit too far away. So while we still hold above 110, there's every opportunity to move back up for a retest of that area. If we break below 110 today, then maybe 110 will become resistance for a rally. So it all depends on what 110 does over the next day, a couple of days. We've got the pound GDP coming out tomorrow. So, if we are below 110 by the time we get to there, I don't think we can get there, but I never say never. I've still got my chart to watch. We'll have to wait and see. Olive May, you want me to show you the CAD Yen 50-minute chart again? There it is. So I've drawn it from that high to that low on the fib. I've done it on the 50-minute chart, but what I'm doing is I'm dragging it from the last 4-hour top to the last 4-hour low. I just know where those tops and bottoms were, so I've just freestyled it on the 15. There's my 15-minute chart. I'll just leave it up there for you. All right, got that? Okay, everybody. And anybody on our live YouTube stream, thanks very much for attending. I couldn't see the chat, so I couldn't ask you questions, but you're more than welcome to register and attend with everybody else. So thanks, everybody. Thanks for all the questions coming in. Hopefully you got some good levels that you can watch over the next few days. Just be very aware of the risk events. Tomorrow, we've got the US PPI data, I think it is. I get mixed up with what days they're coming out. Tomorrow, we've got the pound GDP, 4 p.m. US PPI data, 10:30, Wednesday, and then Thursday, 10:30 p.m. We've got the CPI data for the US. Those two events will be high risk. All right, so some of those levels that I'm talking about today that are a little bit away from price may not be away from price after those events. All right, so just get yourself set with the levels, watch, see what price does. All right, everybody, thanks a lot. Stay safe. Have a great day wherever you are. Look forward to seeing you next time.